Hello, beautiful people. Today I am going to spend a short 10 minutes with you going over some Forex quick tips and to kind of share with you some of the things I've learned on my journey as a Forex trader for the past 2 years. And one of the things my coach has always said is that trading is a journey. I encourage everyone to share, to journal, write down your process, your progress, and your lessons learned over these course of years to come until you become a consistent professional trader. I feel that being able to do these videos, I'll be able to look back one day and see the progress I've made, as well as look at all the help that I've been able to provide to others. So, in this video, I'm going to share with you some of the things I've learned so far, and then I'm going to look at a chart with you that I took a lesson on today, because I always said that there's no 100% strategy out there. Like, there's no way that you're going to win every trade. But when you do take a lesson, it's always good to go back and figure out what happened, what you could have done better. And this might not necessarily something you did wrong. Like I said, things happen and you just know that, okay, maybe if I would have saw this on a higher time frame, I probably wouldn't have gotten in this trade, or vice versa. I'm going to share it with you. I'm going to end the note with that trade. But first, let's start out with some of the Forex tips that I've written down in my notebook. If you do not have a notebook and you don't take notes and you're learning from your educator, you are wrong. I highly encourage you to get a notebook and write out your notes. Do not screenshot them, do not type them out. When you're writing it out, it helps with memory retention and you can always refer back to those notes. Now, I understand that sometimes when writing things out, as like long term the ink can get a little blurry. You can always go back and then at that point type it, but initially you should write out your notes. So the first thing I've learned from some of the professional traders of the or the educators in my group, or just traders who've been trading longer than me, is that if you didn't know, the market sells 70% of the time. And you can always go back and back test this theory, but this was what was told to me. And if you notice, when it comes to sell, you get these big drops on pairs. When it comes to the buy, yeah, you might have a light, nice bull run, but over time, the market sells more than it buys, and you can see that over time. So that's something I want to share with you. Like I said, the market sells 7% of the time. The drops are a lot faster than rising. So you'll get those big drops, those big selling candles on certain pairs. When you are trading, it's best to focus on one trading system. There are a lot of people out there on YouTube with a lot of amazing strategies. To be successful in trading, you have to be consistent. To be consistent, you have to stick to one strategy. Now, just because your educator might have call the strategy different names or have a different way of looking at the market, ultimately it ends up being the same thing if you was to break it down and focus on your one strategy. And what I mean by that is, for example, my coach teaches the head and shoulder pattern heavily. When I say heavy, he teaches the head and shoulder. That is his number one go-to strategy when starting anybody out in the trading program. And so when you look at this, you're like, okay, here go ahead and show the pattern right here. Market goes up, pulls back, market creates a higher high. We wait for the 100% break right here, catch the retest at the right shoulder, and take the trade down for the sale. And then I'm going to adjust this to this point right here. And so then he goes and teaches the starting point. Okay, so the starting point is your last selling candle that pushed the market up. When it goes up, you draw a line. You wait for the market to close below this blue line. Take your retest for the sell down. Well, look at that. At that retest, it's the same as pretty much the right shoulder. Same strategy. He just called it something else. Starting point. Signal candle. That's another strategy. Same difference. The only difference with that is you're catching your entry at a different point of this head and shoulder pattern. So with that strategy, you look for your swing high and your swing low. Well, you're going to use the wicks. This candle is my highest wick, uh, which is considered the swing high in this particular case. Because it's a doji, though, you're not going to want to pretty much use that one. I mean, you still can, but you have to be careful with the candle to the left of it because it's just so small. So I would probably use, instead of this one, I would probably use this candle right here, to be honest with you. And my candle to the left will be this one right here as my signal candle. Same thing, you wait for the market to close below this candle right here, and then you take your retest and sell down. Signal candle, value candle strategy. You got your red box, blue box, same thing. You turn on the indicator and you look for your red box, blue box. You might not sit on the higher time frame because it takes longer to set up. However, when you drop to the 1 hour, you'll see the red box, blue box. So let me go ahead and put this in replay. But what I'm trying to get you to understand that you want to stick with one educator, one trading style, and refrain from being all over the place because everyone trades differently. And what I mean by differently, you have your scalpers, your swing traders, your intraday traders. They take entries using certain type of criteria such as supply and demand, your POI candle. They call it different things. Sometimes you'll realize that it end up being the same thing, but ultimately you want to stick with one educator. I've learned from so many different educators. Now, when you become more consistent with your strategy and you just want to expand your breadth of knowledge, maybe find a better way to teach other people's or to explain things, then you might branch out a little bit. I've followed so many different educators. They do have different trading styles, but ultimately I stick with my main coach. Another thing I've learned is trading is a marathon. It's not a sprint. It's not a get quick rich scheme or anything like that. You have to really be in this for the long haul. They say it takes about 10,000 hours to really learn and master a skill. You got to put in the work, and the work is not you putting in one trade a day. You get the work in by back testing every day or how often, and that from the time you start and the time you stop, you count that time. So when people say I have 6 years of experience, you got to ask, well, what kind of experience? Have you been trading for 6 years consistently? Or that's the time that you started and you've only taken one or two trades throughout the week. So you have to kind of think about that. I'm on these charts every day, literally. Every day I'm doing something. I'm learning, I'm back testing, I'm looking at setups, I'm applying what I've learned from the notes I've taken. So I encourage you to do the same. For the first 30 days, like I said, you might want to focus on one setup, follow your rules, and review your trades. That's where you learn the most. That's where you get the most value if you're just beginning. Focus on one pair or one setup, learn and understand, and then move on and add more. I highly recommend you stick with the regular Forex pairs, not the indices, because you, especially if you're a beginner, until you gain the experience because of the volatility. And once you get that experience, then you can move up to NAS, US 30, Jared 30, gold, oil, those that are more volatile. Yeah, they may move fast and pay more and everything like that, but once again, this is a marathon, not a sprint, so take your time. Another thing is once the market breaks the signal candle, that's the indication that it's ready to sell. So when you get your one strategy, I've learned that sometimes when you're in the zone, for example, you might look for a confirmation for this market to reverse. So I'm going to share with you what that means. So on this daily, let's go to the 1 hour. Well, let's start from the top. On the daily time frame, right? I am looking at this zone right here. So to say that none of this has happened, just to kind of speed up the learning curve. And I draw this out as my supply zone, okay? And so I'm waiting for the market to reach this area. So we're going to go ahead and replay up until this point. And so this is the supply area here. And I'm going to drop to the 1 hour for an entry. Okay. And with this particular entry confirmation, what I've learned is if you wait until the market gives you your signal candle strategy in that zone, which is the zone that you're looking to sell, that's when you know that the market is ready to turn around. Right now, it's not, because the trend is going up. It's still very bullish. What I'm looking for is pretty much an engulfing candle of the signal candle. So I'm going to patiently wait. Let me move this a little further along. Oh, there we have it. Okay. See how you have this big candle right here, which tells me there's a lot of sellers in the market. So that is the indication. Now, granted, this is my swing high point. The candle to the left is my signal candle, and I will literally wait for the market to close below it to consider selling. However, when you also want to look at price action, if this is your last selling candle that pushed that market up, you pretty much have almost a head and shoulder pattern forming. Market goes up, market pulls back, market goes higher, market breaks the neckline more than 100%, take the retest, sell down. Okay, that's how you want to enter those trades. So I'm sharing with you the signal candle can be used as a confirmation that the market is ready to change directions. And as you can see, this market is selling, moving forward. All right, next I've learned that the market, that trading is 90% psychological and 10% skill. The psychological part is the hardest part to get over if you are not as disciplined and if you get in your own way. And what I mean by that, I mean by like, your ego, you lose a trade, you are revenge trading, you're over leveraging, your risk management, you get emotional. You have to, trading is more than just trading. It actually helps you learn more about yourself and what type of person you are in general. I know I'm not a very patient person, and so now me knowing that, I realize that I need to be more consciously aware of my patience. If I'm entering on a 1 hour, I can't expect this market to necessarily move 20, 30 pips right in 10 minutes and drop, like, unless there's news. And so I should not be looking at my phone for at least an hour for this market to actually move in the direction that I want to do. I didn't realize I was doing that. And this is why you should have an accountability partner to kind of highlight some of the things you're doing that you don't realize that you're doing, because it's become subconsciously in your mind. It's like you don't think to walk, you just know to walk. And sometimes that carries over into trading. You don't realize that you're checking your phone while you're in the motion, because you're trying to see that the just trade is going in your favor or against you. You don't realize you're doing it until someone says, stop babysitting your trade. Stop looking at your phone. Has it been an hour? What are you looking for? If you're going to be that anxious, you need to find a hobby. You need to find a distraction while you're trading so you're not constantly looking at the phone. So that's what I wanted to share with you. Also, just know that big wicks will get taken out, especially they're on a daily time frame. So look for those. The market will eventually take out those wicks. And what I mean by that is this. Go to the daily time frame. Let me move to these drawings here. Look for some big wicks on the chart. Backtest it. Okay, you're going right here. Market took this out before it started reversing. So that's what I mean by big wicks. Is that current market? It's daily. Okay, that's not current market, but that's an example. If you go back, there was a wick right here when this market was going down, came back up for the pullback, dropped lower. It was taken out when the market eventually reversed. This wick was taken out. This one is going to be taken out at some point if it haven't so already. So that's something that was passed on to me. Pending orders. I learned this lesson today. Matter of fact, I'll show it to you at the end, but when you take in, sometimes when you have pending orders set, the market will probably come 1 or 2 pips into your entry, but it won't hit your entry and go in your direction. And you're wondering why, wow, why did it miss my entry by a pip? Or if it looked like it hit it, but it didn't activate your trade. The reason being is because of the spreads. So you may want to adjust your entry when it comes to pending orders. That happened to me today. I also learned that your 1 hour analysis, how you enter the market, is different from your 4 hour and up analysis. And what I mean by that is I'll see setups on the 1 hour and I miss it because I'm waiting for a changing character, a changing direction. And what I mean by that, I'm looking for this move to happen on a 1 hour time frame. And what typically happens is it gets into your zone and then just take off. It don't even come back for this retest. So you'll get like this move all the way up before it come way back down here. And by the time you come back there, you already missed about 40 pips. Versus you're in a bigger zone and you're like, okay, well, I'm not about to risk 80 pips of drawdown. I'm not about to be in 80 pips of drawdown just to into this trade because it's in my zone. Instead, I'm gonna wait for confirmation that this market is ready to reverse. And so the way you would do that is say we're on a daily time frame, market's in the demand zone right here, right? And you're like, oh, it's in here right here. Let's go ahead and back this thing up real quick. Oh, it's right here in the demand zone. Let's go ahead and take it, right? But yet, this market's still selling. As you can see, it's still. So had you taken this trade as soon as it hit the demand zone, okay, for the buy, you would have been in drawdown for about 57 pips. My stop loss is 30 pips, period. So I'm already out this trade. What you want to do instead, when you are analyzing on the 4 hour or higher, is wait for your change in direction confirmation. You do that by being on the 1 hour time frame and you look for this pattern right here. Now this is a little choppy, but you can still make it out. Just the last buying counter that pushed this market down. So you can start right here. You got your pullback, it goes lower and it breaks above this neckline, retest, and then take the trade for the buy. And if that's too hard for you to see, move up a time frame, you get the same thing right here. So you're looking for this pattern, kind of like a W, to get that change in direction. If you're smart money trader, if you're a smart money trader, it's called change of character. And it's kind of like the inverted head and shoulder. You take it right here, take your entry right here for your buy up. Okay. So that's the difference between a 4 hour and a 1 hour. 1 hour analyst, I'm just gonna pull. If I see my setup, pull the trigger. 4 hour, I'll wait for confirmation. You want your multi-time frame confluence as well. Also, remember what happens on the lower time frame will also happen on the higher time frame eventually. And what I mean by that is I trade the setup. So say I'm on a 15-minute time frame and I see a setup. Okay. Once that setup plays out, it'll eventually play out on the 1 hour. And so for this particular pair right here, let's go to this one. All right. Right now we have a red box. Got the break above it. Extend it. So you got when you get to 100% with this particular strategy, market hit it for the buy. So this is where I'm gonna drop a line right here where this market played out based on this red box on the 15-minute time frame. Now you go up to the 1 hour. Okay. Red box gone because we're on a higher time frame, but we have another setup here. So this market's here and is eventually, this red box isn't ready yet, but we see a blue box up here on the 1 hour time frame. We can trade this box. Why? Because the market, this was the last selling candle that pushed this market up. Okay, so pretty much you got this head and shoulder pattern. Break the neckline right here. Wait for the market to get in this zone. Take the sell down. Okay, now we got another red box because well, this one isn't ready just yet. So let's move this forward because this was the last candle that pushed this one down. Now, once we get the market to close above that candle, that last buying candle, we can go ahead and play off that red box. Okay, now it's ready. Now, before the strategy would be we will accept the wick, but we prefer it to break through. So now that this red box is activated because of this move right here, this broke this last buying candle that pushed this market down, which activated this red box. We go ahead and extend it. Might take some time for it to come back, but it eventually will. And you'll take the buy off of the red box. And as you can see, it'll hit the top of the violation, but as you can see, it respected it. It came into that box not once but twice, and it gave you 50 something pips, probably both times. So that's what we mean by like progression. Once the box plays out, you can go to the 4 hour and look for another setup as well. So moving on, this video is a lot longer than I expected, so I'm gonna go ahead and wrap this up pretty soon. Some of the things I've learned. Signal candle cannot be engulfed by the swing high or low. This was something I learned through one of my personal friends, personal traders, and we back tested this. And honestly, it's pretty much true. It's not good to take a signal candle trade when it's been engulfed. It's just best to move on to the next candle. And so what I mean by that is this candle right here. Let's see if we can find one. Let's see if we can find one from the bottom. Nope. This is a good one. This one looks, well, this one looks a little engulfed, but it's really not that high. So let's see. Nope, nope. This one right here. All right. The reason why you don't want to use the candle that's being, well, no, it's not this one. It's not that candle. Sorry about that. Let me keep going. I was gonna say it was this one you would move over, but I think that's right because with this one, boom, boom, boom. So this market came back to retest right here. Missed it just a little bit. Okay, so I am looking. So this would be one right here, your swing point here, which engulfs the signal candle. You technically want to move to the next candle to get in this trade because sometimes it will not work out. It won't even trigger your trade. And so with this one, it happened to work out where it did come down to this level for the buy up. Most of the time, it will not work out in your favor. So this right here is not it. So this right here, here's a prime example. You got your swing high, and then this technically with your signal candle, which is is inside this candle. So what you're gonna do is move over to the next candle that is not engulfed by this. And these little baby candles are pretty much engulfed, but you can use this next one right here. And so I don't know if the market ever comes back to this line just yet. And I just lost my spot. Sorry about that. But I hope you get the gist. Just back test it and you'll see what I'm talking about with that. Another thing that I am going to share with you is my lessons learned. Those are the tips I've learned so far on my journey. And so now we're going to look at this trade that I took a small lesson on. Sadly, I was in profit in this trade. and I just thought it was going to go down further. And so that's what I get for thinking, right? Okay, so I had this beautiful head and shoulder pattern set up. Let me go ahead and hide some of this so it's not so messy looking. I was in this trade right here initially. Actually, let me rephrase that. I was not in the trade. I had my pending order set right here at 64.55. Literally. And this week, let's go ahead and look at the high of this week. The high of this week was 64.54. So I missed my entry by one pip and probably a couple more pips because of the spread. Had I gotten this trade, I eventually did market execute, but I stayed in the trade way too long, and then I called myself setting a pending order again in this zone, thinking it would come back in, which I'm gonna tell you why that was the wrong move. So I was in this trade. I could have gotten 50 pips off this one move. Pretty much gave back half of that because I think the most I saw was 20. So I probably got in a little late. So I was like, all right, cool. Maybe it'll give me another entry for the right shoulder. Let me send another pending order right here. Well, remember that when you have a zone that has not been retested at all, it's fresh money. Okay. Those are the times is when you really want to get your money and go get in the trade or not. Because there's no guarantee that the market is going to continue dropping or respect that zone the second and third time. And here's a prime example of what I mean by that. So I'm thinking that I could get in again for the sell. Market blew right past it. I'm not out, I'm knocked out. I think I looked at my phone when it was about 20 pips in. I saw the size of the candles and I was like, this market is about to just keep buying up. And it's probably going to go to this high right here where the teacup. And sure enough, it's at this level. Get the reaction here for the sale back down because I wanted to catch the buy back up, but I missed it because of work or whatever. Been working, and honestly, I shouldn't even been looking to buy back up until this head was violated. But hey, it happens. At least I understand why I lost. It was not a fresh zone. I already had my right shoulder from this move right here. I should have just left it alone. I should have took my money and be done with the trade. And so I wanted to share that with you. My AUD USD trade today that I took a lesson on. So don't make the same mistakes as I did. I appreciate everyone sharing their time with me on this call. This is a lot longer than I normally do because I know the attention span for most people are like really short. So I apologize in advance. I want to say happy trading, and until next time, we'll see each other soon.